All right, we are live, Jay. How are you doing?
I am so thankful to be live right here on another Real Estate Investing with Jay Connors show. So yeah, we are live, and so before we get kicked off with the official show, we'll give just a couple of minutes for people to come on in. So Scott, tell us what's going on down south with the latest coronavirus.
Well,
I think I saw in your email you called it the apocalypse.
Apocalypse. The apocalypse. Yeah. Well, it is kind of like everything is crashing economically. People are stuck in their homes. Their lives are being totally changed. And the good news here in Medellin, Colombia is in the last 24 hours, 0 new coronavirus identifications or cases going on, and no new deaths. So who knows? We've been on lockdown for about two and a bit weeks, and maybe that has stopped everything. I can't imagine how anybody is getting anything, because when I look out on the streets, there's one person walking to the grocery store, at that end, and another one at this end, and they're nowhere near each other. So I think we're doing a pretty good job of not spreading the virus.
Yeah. Well, I heard on the news this morning, and by the way, folks, as you're now just coming on, we're going to be kicking off the show here officially in just a moment. But in the meantime, as you arrive, go ahead and type in the comment bar below the video your name and your city and state that you're tuning in from. I always love to see where everybody is coming from. And so say hello to everybody and type in the comment bar. Yeah, I saw in the news this morning, Scott, that for the first time, it looks like New York City, or the state of New York, the actual number of cases they're either right at the peak or very, very close to the peak, started to decline. And
that's great news.
Yeah, I don't know if you had heard that or not.
No, I hadn't had time to check that. So that's great.
Because today is J Day, right?
That's right. Today's what we call J Day. I wake up, I get dressed, brush my teeth, while I shower, get dressed, brush my teeth, get dressed, like whatever order it is. And then I get on and I basically spend the whole day with you with a few hour breaks here and there. So we call Tuesday J Day. It's my favorite day of the week.
So I'm going to go ahead and give everybody a little heads up. If you are here on the show, and you're here because you got an email from me, my apologies. The guest that we had lined up, Robert Martinez, is not able to join us today, and we have rescheduled him for a little bit later. So anyway, apologies on that email, but I'm glad you're here anyway, because I'm going to open it up for open Q&A for you to ask any questions that you got going on. And I'll answer your real estate investing questions right here. So in the meantime, if you've tuned in and you haven't put in the comment bar yet, type in your name and just say hello to everybody and the city and state that you're tuning in from. And we're going to start up the official show here in just a second. But I always like to see where folks are coming in from. And what I've also done is, and I'm trying to move back and forth between the private chat and the live chat. There we go. So what I've also done is I have my notes here with me, where the live event that I just finished up a few weeks ago here in Eastern North Carolina, the live event that I finished up, we'd have this thing that I do called aha moments, when people really learn something that they can use in their business. They write it down on their aha moment cards and they turn it in. And so I've got 77 aha moment cards here. Well, welcome Teresa and Larry. Good to see you. Teresa and Larry in my mastermind group. And as a matter of fact, we had a fantastic mastermind call yesterday for about an hour long, bringing each other up to date on what's going on and how we can thrive and survive in the midst of the uncertainty. And welcome, Lewis, all the way from Washington, D.C. Lewis, we're glad to have you. Everybody else, say hello as you come into the room. Give us your name and your city and state that you're coming in from, because we'd love to know who is joining us. So, Scott, I'm going to go ahead and move forward, and I'm going to cover some information on some of the aha moment cards that were turned in. And in the meantime, folks, as you're coming in, let us know where you are, who you are, where you're coming in from, and any kind of question that you may have, and we'll get your questions answered.
All right, so we're going to do the official opening of the show starting right now.
Well, hello, everybody, and welcome back to another episode of Real Estate Investing with Jay Conner. I'm Jay Conner, the Private Money Authority, coming to you live right now from Morehead City, North Carolina. And we are live streaming on our Facebook page, on different YouTube channels and other platforms. And so if you're watching live, we're glad to have you here. You can ask your questions in the comment bar right below the video, whether you're watching on YouTube or you're watching on Facebook. Either one of those, I want this to be interactive. And if you are listening to the podcast, you may be listening in on iTunes or one of our YouTube channels. Be sure to subscribe, and on iTunes, rate and review. We love your comments. So what we're going to be doing today, or by the way, if this is your first time on tuning in to our show, we talk about all things related to real estate investing here on the show. What I'm known for, if you're brand new, is, of course, the funding of our deals, getting funding for your deals by using private money. I became known as the Private Money Authority back in 2011 because I got cut off from the banks way back in 2009, and it ended up being a blessing in disguise. And even though we are going through these uncertain times right now, and people are, dealing with the unknown, I can promise you, I don't know what all is going to come out of it, but there's going to be some opportunities, and there's going to be some blessings in disguise that come from it. As I relate to when I was cut off from the banks back in 2009, I mean, that was the biggest blessing in disguise. But as it relates to funding for my deals, I wouldn't have had any reason to look for other ways to fund my deals. So because of that crisis and the global financial crisis, then, a lot of good came out of that as well. And so I've got a big announcement to go ahead and start getting out to everybody right now. And that is, here's one of the opportunities that's already come out of the crisis that we're in now. And that is my next event in June. We have already decided that is going to be a virtual event, virtual live event. And so folks won't be coming to Morehead City here in Eastern North Carolina for the live event. That will be virtual. And it's going to be a 3-day event. In fact, I need to pull the actual dates right up here. It's in June. So just a few short weeks away. It'll be here before we know it. So the actual dates for the live event is June 10, 11, and 12, June 10, 11, and 12. And of course, my mastermind members, we always meet the 2 days prior to that. And depending on how things go and whether we've opened things back or the country's been opened back up, we may be in person. Or if not, we'll do our mastermind meeting virtually as well. So everybody go ahead and mark your calendar, June 10, 11, and 12. For the Real Estate Investing Cash Flow Conference. And I'm going to give you a special link. And so we can put that special link up. And then my producer's already beat me to it. So you can go to www.jayconner.com/live event, all spelled out, LIVEEVENT, jayconner.com/live event. And you can go ahead and get registered there. And we're going to make it happen regardless. So if you're just tuning into the show, we love to hear where folks are coming in from. So in the comment section below the video, go ahead and put your name and your city and your state as to where you are viewing in from, and say hello. We just love to hear where people are coming from. So I'm looking here at the aha moments that were turned in at the last live event. And I see one
Jay,
down here.
if I can interrupt you for just a second,
Sure.
we've got a special guest joining us.
Oh, we do?
Yes, he's arrived.
Awesome. So
Yeah.
we do have Chris with us.
We do, and he's a last-minute replacement for Robert, who was unable to be here. So really appreciate Chris taking time out of his busy day to be with us. And I'll cue you up for the intro.
Okay, excellent.
5, 4, 3.
Well, folks, I'm so excited to have as my guest here on the show today. We've got Chris Miles, and Chris has been on the show before, and he was a fantastic guest. And I got a special thank you for Chris for coming on the show here. We had actually another guest lined up that could not make it on the show. So at the last minute, Scott, my producer, reached out to Chris and invited Chris to see if he could join us today on the show. And I'm just so excited to have him. So before I actually start talking with Chris, let me tell you just a little bit about Chris as we have had him on the show before. And he's known as the cash flow expert. In fact, he's also known as the anti-financial advisor. Anyway, Chris is a leading authority on how to quickly create cash flow and, as important, lasting wealth for thousands of his clients, entrepreneurs, and etc. He's been featured all over the place. He's been featured in U.S. News, CNN Money, Bankrate.com, and he's got a fantastic reputation for giving his clients life-altering financial results. And the name of his company that he advises people from is called Money Ripples. Money Ripples. So anyway, his background, he was a financial advisor for many years. He was a stock coach. And he came to the realization that the financial advising industry was not really showing anyone how to quickly and safely become financially prosperous today. And in fact, it's really timely that Chris could come on today because I believe, in fact, Chris, he was able to retire back when he was 28 years old. And I think Chris has been preparing for what we are now in with this crisis that we've got going on since the last financial crisis. And I'm definitely going to want to visit with Chris about that. So, Scott, let's bring Chris right on here out of the green room and on the front stage. So, Chris, how are you doing, my man?
Just fantastic, Jay. How are you?
I'm doing fantastic. I'm so appreciative and glad that you could join us here on the show at the last minute because we sent the email blast out yesterday and today. So we've got all these people that we're anticipating. And I tell you, it might be a blessing in disguise that you are actually able to be here. So again, folks, if you're just joining the show, we want to know where you're from. So if you're watching on the live stream right now, put in your name in the comment bar below the video, your names and your city and state. And as Chris and I visit, you can ask Chris any question about the information that he has. So, Chris, tell my audience, what is it about what you do that you would call yourself an anti-financial advisor?
Because the stock market stinks. That's why.
It sure does today, doesn't it?
It stinks all the time. Even when it's going up, it's not great. I mean, sure, it seems dandy when it's going up, but the truth is that, and this is what I realized when I was a financial advisor right during the whole Y2K era, after 9/11, and I did that all the way through the mid 2000s. And I'll tell you, when you run the numbers, when you look at real numbers of the market, right? Like for example, the S&P 500, it's only averaged 7.5% for the last 30 years, like the true rate of return, not the average that they all throw out there on billboards practically, right? But the true rate of return is only 7.5%. And I mean, and that's with all the ups and the downs, lefts and rights. And, I had a guy reach out to me recently from the state of Washington. He said he had actually talked to me last fall and he's like, well, I've got $1 million in the stock market. I want to retire next year, but I'm not sure if I should keep it going the way it is. And I said, I can't tell you legally to cash the money out, but I will tell you the market is way, way higher than it should be. Way higher than it naturally should be at, because markets don't go up for 10 years straight like it did. That's completely against history, right? Usually if it goes up for 10 years, to go into balance has to go down for 5 years after that, right? So I told him, I said, this might be a good time to move into more conservative things, get out of the stock market, into treasuries or whatever it might be, or money markets instead. Just get on the sidelines. And he didn't do it. And he texted me freaking out 2 weeks ago saying, Chris, I just lost $200,000. He's like, maybe I should work 5 more years.
Yeah.
And that is why it doesn't work, because my dad was in the same boat after Y2K. He was 60 years old, thinking he was going to be able to retire. And what happens? Market slams down on him and he says, never mind. And he works another decade plus, And that's the thing, is that the things that we do with like real estate investing and things outside of what financial advisors offer, there is where there's actually a hope. There's actually a chance of real financial freedom. It doesn't happen throwing your money and gambling it in the stock market. Those are not investors. Those are gamblers. People that are actually becoming financially free, like I did, where I retired twice, is from us doing things that create income and cash flow that come in, whether you're working or not. That is the true key.
If you're just joining us here on the show, we've got as our special guest today, Chris Miles, known as the cash flow expert. And he's got some very, very strong advice on that's unconventional, that actually will pay off for you in the long term. If you're just joining us, be sure and say hello. Put your comments in the comment bar. We got Bart and the Barton Guy team from Orlando, Florida. We got Angela from Elon, North Carolina. We got Steve from Douglasville, Georgia. We got D. Harold from Charlotte. Just welcome to everybody. So as Chris is sharing with you his information today, type in the comment bar, particularly here if you're on the live stream, any kind of questions you got for Chris. So I would think one of the first questions people would want to know, Chris, is, what if I'm not investing in the stock market? What should I be investing in? And how can I become financially free and quickly and also build long-term wealth? And I know you've got a laundry list of different strategies, but start us off with one and let's drill down on it a little bit.
Yeah. So if you look at the traditional model, you're supposed to save up money forever, right? Build it up. And say you get up to $1 million. Now, if you get to the point you say, I've got $1 million, can I retire? The answer is probably going to be no. Because in the traditional way of doing things, the mainstream way, financial advisors, if they're good, they'll say you can only pull out 2 or 3% a year so you don't run out of money. Because the thing is, you're going to have inflation and everything else to fight against, right? So think about this. You have $1 million, 2% a year. That's $20,000 a year. Congratulations, you are a broke millionaire. You went from millionaire to living on below poverty level, right? That's not what it should be. Ultimately, the whole reason we're told to throw our money and get 401k matches and all that stuff that really don't add up to being much, the reason we're told to do that is so we can accumulate and then live on less than the interest, right? But the real reason why we want it ourselves, not what they tell us to do, but what we want is we want income. We want cash flow. And the way to do that, like, for example, Jay, I know you guys do things with like hard money. Like if somebody can like go and lend you guys money, you'll pay them a set return every single year or quarter or whatever, right?
That's right.
You pay them regular income. That I think that's the key, because you cannot have financial peace and freedom if you don't have predictability. If you don't know what you're going to be making from one day to the next because a virus comes and all of a sudden your retirement just dropped by 25, 30% in a couple of weeks, that's going to rock your world. And if you're pulling money out while it's dropping, it drops faster. So then even if the money market comes back up, it can't get back up to where it was again. So you want predictability, right?
Well, that right there is first a writer downer, as I say. Okay. I mean, when it comes to particularly retirement years, you want the money to keep printing, right?
That's right.
You want the money printing. I don't want like money just sitting there that I'm sucking out, right?
Right.
Like, and I'm so glad you brought this point, because particularly my senior private lenders, they love our private lending program because nothing's coming out of their principal. They're not pulling anything out of the principal. And when you say predictable income, they know exactly the rate of return that they're going to get. As of today, I'm paying my private lenders 8%. So they know. So 8%. So hey, I say you make an
Let's use that example,
Chris.
Yeah.
You make an excellent point. If you got $1 million, which would I rather do? Pull 2% out per year,
Uh-huh.
and now it's going down,
Right.
or take $1 million and earn 8% a year, and nothing's coming out of the principal.
It doesn't take a math genius to figure out, hey, can I pull out 20 or 30,000 a year as long as the market smiles on me the right way, right? Versus 80,000 a year, no matter what, right? And now people might say, well, real estate sounds risky. Well, it depends on how it's being done. The truth is that 8% for a lot of us that are investors that know what we're doing, we would do that all day long because we know we make more than 8%. You know, even with weird markets and everything else, we know that 8% is a very conservative return to keep paying. So that's the difference. That, I mean, if you want to look at apples to apples, right? 20,000 versus 80,000. That means instead of having that's $1 million to $1 million, right? Now, if you want to have that same 20,000 a year income, you can either save up $1 million in your 401k, or you have $250,000 that you invest with Jay, and you get the same return. It's leverage. It's actually making your money work harder for you, so you don't have to work so stinking hard for that money.
Excellent point. If you're just joining us, we've got on the show today my special guest, Chris Miles, known as the cash flow expert. And if you're just joining us, be sure and put in the comment bar if you're on the live stream watching live. Give us your name, say hello, and your city and state that you're from. I see we've got Marie with us from Toledo, Ohio. We've got Kevin from Waynesboro, Pennsylvania. So welcome to the show. All right, Chris. So let's just continue on with the same question. So you laid the foundation. Mm-hmm. The foundation being we don't want to touch the principal. We want reliable, predictable income. So being a private money lender could be a way. But before we even get to the point of having $1 million, mm-hmm. how do we get to the point of saving up and having $1 million that we can invest once we do get to retirement years?
Yeah. So few places I usually look for when I look at my clients' situation and try to find the resource, right? I'll tell you, with this current market, if you're looking for real-time advice right now with the virus and everything going on, the advice I've given all my clients is 3 things: get lean, get liquid, and get out, right? So get lean means, really being consciously aware of what you're earning, what you're spending, just watching the money coming in, like knowing exactly what the numbers are. Because when you don't know the numbers, you tend to just kind of guess, right? If you ever seen the movie Robin Hood Men in Tights, there's a part in there. There's the character Blinken, who's the blind servant, right? And Blinken's up on a watchtower, and Robin Hood asks him, he says, "Blinken, what are you doing up there?" He's like, I'm guessing no one's coming." He's like, "That's ridiculous. Get down." That's kind of what happens is when you don't know your numbers, you're just guessing, right? You're just looking at what's available in your checking account, and that's kind of what you think is what's going on. So really, don't have to be cheap. I don't want you to be cheap and live on rice and beans like some people will teach, but just be really aware of what you're making, what you're spending, and knowing those numbers. Second thing, I said, get liquid. This is huge. Cash is king right now, especially with everything going on. Because I'll tell you, not only are there great investment opportunities currently right now, but there will be even more opportunities later too.
Absolutely.
And there always are, right? There's always opportunities. So getting liquid. So what does that mean? One, make sure we have cash savings. We have emergency reserves. Make sure you have that money there. It's protected. 2, here's a key thing I've had people do, and I think the clock is running out right now, is if you have equity in your home, find ways to get access to it. A lot of times I'm having people look at home equity line of credits because the rates just dropped 1.5% over 3 weeks. I mean, just dropped like a rock. Usually you'll see home equity lines of credit around 4.25%, give or take. Well, that's cheap money, because even if you have money at 4.25% and you're earning, Jay, like 8%, right? That's what the banks are doing to you every time that you give them money in a savings account. They pay you 0.nothing%, but they go and loan that money out on car loans at 3 or 4%, mortgages at 4 or 5%. I mean, they're making money off your money. You're just doing the same thing reverse. And so getting that money out, and even if you don't need the money, even if you don't know where to put that money, I even said people listen, get the max line of credit they'll give you, and then cash it out, and move it to another bank. Don't keep it the same bank, move it over, because the last recession, if I learned anything from being burned in the last recession, is that banks don't always give you your money. Even if you have a line of credit open, a home equity line of credit open, they can cut it down with no warning. And that happened left and right with people with great credit, perfect credit, and people with bad credit. It didn't matter. So right now is your perfect opportunity to say, hey, I want low interest money that I can leverage. Get it out of your home. It's not paying you a dime in your home, but you can get paid a lot more getting it outside. Give you an example. I had a guy talk to today. He's getting 3.25% by locking it in for 15 years. I said, hey, get that cash all out, lock in the rate at 3.25%, which is amazing right now. He'll get $200,000 out. It'll cost him $810 a month. Now that 200,000, I mean, even we use the same number, 8%, right? That's right there, 16,000 a year. You know, that's about $1,300 a month. But he's paying $800 a month. He's making $500 a month for free. I mean, that's no money out of pocket. You know, so that's Chris, something people don't realize they can do.
You know what's so cool about that strategy is you can't measure the rate of return, because when you're also known as arbitrage, right? Because when you're getting money from the bank on a home equity line and you're loaning it out at a higher rate, I can't even measure the rate of return. It's infinity, because I'm not even loaning out my money. I'm loaning out somebody else's money, and I'm making money on their money that's not even my money, right?
Yep. That's the thing. If it costs him $810 a month, you know, to get that money out, but he's making $811 a month, he has now made an infinite rate of return on that $1, because again, he hasn't put any money into it. That's the beautiful thing, right? So that's what I mean by getting liquid, is getting all the cash available in your hands. Now, getting out, that also means like, hey, you've probably got mutual funds, you might have IRAs. By the way, right now, if you have anything you could say, you're being affected by the virus in any way, shape, or form, you can get money out of an IRA before you're 59 and a half without that 10% penalty. You just have to say, hey, the virus is affecting my hours or my job or this or that and my finances. Cool. All right, we'll give you the money. Yeah, you know, you will have to pay taxes on money because you haven't paid it yet, but that's fine. You're going to pay taxes in retirement anyways. And that's technically, right now, these next 2 years are the lowest years in decades for taxes. After this year, the taxes go back up. So why would we want to get taxed more in a couple of years, right? So, I mean, consider that option. I'm not saying you liquidate everything. I'm just saying one option I look at is, hey, if we can liquidate money out of IRAs or whatnot, or 401ks, if we can get access to that money with less penalties because of a virus right now, this could be your opportune moment to say, great, now I can take that money and turn that into real income, right? That's what's so fun. I love it.
So it was get lean, which means don't be doing expenses that you don't have to. We only want essential expenses. Right. And not that we haven't been hearing the word essential a lot lately, right? Yeah. And get liquid. So get all the cash out of your equity that you can, and you know, if nothing else, sit on it, right? Yeah. Have the cash available. And thirdly, get out. So my producer Scott told me that since you were so gracious to come on the show here at the last minute, that you were going to have to jump off at the bottom of the hour. Is that correct?
I got a few more minutes, but yeah.
Okay. So what you got? 5-10 minutes?
Yep, exactly.
Excellent. Okay. So we're going to take advantage of your graciousness. All right. So when you advise your clients, is there a formula or a way that you come up with advising them? And it may vary from client to client, or you may have one set formula, but how and what do you advise your clients? How much cash do they need to have on hand for themselves, for their business, for when the next crisis comes along that's totally unexpected? When I say totally unexpected, I mean, prior to a couple of weeks ago, I mean, we didn't know. I mean, 3 weeks ago, we had no idea that our world would be looking like it is now. How do you figure that?
You know, cash reserves are absolutely essential, right? So I recommend at least 6 months of expenses, right? So again, talking about getting lean, I said, make sure you know what your expenses and your income is. Understand that. Like if say your expenses are $8,000 a month, right? If they're $8,000 a month, times that by 6, you're going to want about $50,000 sitting in cash that you're not touching, you're not investing with it, that it's available there just in case. Because the truth is we don't know. And this goes for business too, because a lot of businesses right now, and we're going to see this, businesses are going to start showing them going out of business because they don't have enough cash reserves. Some of them might only have about a month to 2 months, and then they're out. They're completely out of business. And they're hoping and praying for this bailout money to show up just in the nick of time, which it may or may not, right? Especially if it moves at the speed of the government. We know it doesn't move very fast. So there's going to be a lot of changes. So having those liquid reserves, both in business and personal, a business, I say minimum 3 months, personal, at least 6 months, right? And then here's the next objection people have. They'll say, yeah, but Chris, that's a lot of money I could be using to make me more money. That's just sitting there doing nothing, especially if you put it in the bank earning 0.0%, right? So my recommendation is, well, let's split it up. Let's make sure that it's all liquid, but it's not just all sitting in earning 0.1% in checking, right? So, or savings account that you have at your bank. So my 6 months reserves, I'll split up because my wife, for example, last weekend, she said, Chris, we want to make sure we have more reserves just in case. Even though we have lots of income streams coming in, she's like, I just need that security, right? So she wants $160,000 sitting on the sidelines. So I said, great, I will do that. But 2/3 of it needs to be sitting in the life insurance. So I have a life insurance savings that I use. We talked about that on a previous show, but I'll keep that money there because I'm earning 4 or 5% tax-free on that money. So I keep that money sitting there. So I'll have of that 160,000, about 100,000 earning way better than my bank, plus it's tax-free. And it's protected from creditors and lawsuits. The other 50, 60,000, that's sitting in savings, whether it be in the bank, earning nothing, or sitting in an online savings account where I might earn like 1.5% right now. So I'll have money split up between those so I can get to it quickly. The life insurance money will take me about a week to a week and a half to get. So I have that ladder type of strategy where if I have to get to it immediately, I've got the bank, I've got the online savings, but if I know it's going to be big, then I can have time to request the money from my insurance too. So that's what I do with my money.
Excellent. One of our viewers, Teresa, in fact, one of my mastermind members, her question is, what's the 3D thing? So one more time, tell everybody what those 3D things were and what they're for.
Yeah, get lean, get liquid, and get out. So get lean was, make sure you tighten the belt, be very aware of your expenses, make sure you know how much money's coming into, so you know how much money's coming in and out, right? 2 is get liquid. So make sure you have, just like we talked about with the savings, make sure you have cash on hand. 3, get out means that's primarily referring to your stock market investments, right? Mutual funds, IRAs, 401ks. You may not be able to get it all out because there could be massive tax consequences, but that is a thing that I promise you, we are entering a recession. They've already pretty much said it is a recession. Never, ever have I seen a recession where the market didn't go down. And if the market goes down, it takes usually at least 2 or 3 years to hit bottom. Right now, we've already had a week of it going back up, and it's kind of like now settling a little bit. Don't think this is the lowest it's going to go. So if you want to preserve what you have, it might just mean moving it to a money market type of account within your IRA or 401k. You may not have to cash it out or liquidate it, but you might want to move it into something that's safer, money markets or treasuries or government bonds, something like that, which aren't always totally safe, right? But it's better than being the stock market, which could all of a sudden drop like a rock, like we've already seen. I see this as an opportunity to get your money moved over, get it safe, preserve what you have right now. Whatever you've lost, preserve it, minimize it. If you can cash it out, that could be a great opportunity to make a lot more cash flow and money. And that's the whole goal is how can we take all these resources and money, turn it into actual income, right? Income that can actually replace your income. So if you do get laid off, you're not stressed. You're not worried. You don't have to worry about having the cash reserves. That's what I keep telling my wife is, hey, even if I have 3 of my income streams cut off, I still have 12 others. I'm still okay. But again, it's always about how to protect yourself, have a good defense and a good offense.
That's awesome, Chris. Well, Chris, I'm sure my folks are going to want to reach out to you, and people during the times we're going through right now, for sure need some extra hand holding. And so how can people continue the conversation with you and contact you?
Yeah, you can actually go to my website, moneyripples.com. That's MONEYRIPPLES, as Scott just put on there right there. So moneyripples.com. Or you can even check out my show, The Chris Miles Money Show, that you can find on iTunes as well.
That's awesome. Chris, parting words and final thoughts that you'd like to share with people given the times we're in.
Yeah, I'll tell you again that get lean, get liquid, and get out. Remember those words because the time is short, right? There are going to be things changing. You will be so grateful that you have cash in your hands to take advantage of opportunities coming right now. The second thing I would say is just overall, if you want real financial freedom, it's not from how much money you throw in your 401k, because there is no freedom in the stock market. There's no freedom when you don't have certainty. You want predictability. The best way to get freedom is creating cash flow. When you have more income coming in, other streams of income coming in, that is not just from one table leg that's wobbly, but you got multiple legs, multiple streams of income coming in. This is where you create more options. And when you have more options, that is when you have freedom. Real financial freedom comes from having options, and options come from having multiple streams of income and cash flow.
That's awesome. Chris, thank you so much for coming on today. I appreciate you, my friend.
Hey, it's been a pleasure, Jay. I so appreciate being here.
Thank you. All right, folks, there you have it. A wrap for another episode of Real Estate Investing with Jay Conner. I'm Jay Conner, the Private Money Authority, wishing you all the best. And here's to taking your business to the next level. We'll see you on the next show, and bye for now.